we can start. So, good afternoon, everyone, and welcome to our webinar celebrating 10 years of responsible tax conduct with SSE. My name is Jaime Boswell, and I'm the head of accreditation here at the Fair Tax Foundation. If you're not familiar with us, we provide the Fair Tax Mark certification, stamp of approval for businesses committed to responsible and transparent tax practices. It's not a self-certification scheme. Our certified businesses are independently assessed by us against a robust set of standards each and every year. It's fantastic to see so many of you joining us today as we mark a significant milestone, not just for SSE, but for responsible tax conduct across the UK and beyond. Over the past decade, the Fair Tax Mark has become a beacon for transparency, integrity, and fairness in corporate tax practices, and SSE have been a proud pioneer on this journey. Today, we're going to be reflecting on the progress made, sharing insights from SSE's experience, and looking ahead to the future of responsible tax. I'll be chatting to Martin McEwen, who is the Group Tax Director at SSE, to gain insights on why they felt it was important to lead the way in this area all those years ago, and what the wider impacts are that transparent tax practices have on our society. Under Martin's leadership, SSE became the first FTSE 100 company to earn the Fair Tax Mark. Martin and his team have set an extraordinary example in responsible tax conduct and sustainability, and we are really excited to have Martin here with us today, sharing his thoughts. But before we dive in, the webinar is planned to last around 45 minutes. The discussion with Martin will be around 20 to 25 minutes, followed by 10 to 15 minutes for questions at the end. So do please type your questions into the Q&A box during the webinar, and we'll address them at the end. Thank you all for being here, and we hope you find this discussion both engaging and thought-provoking. Okay, so let's get started. Welcome, Martin, and thank you for being here today.
Well, thank you very much, Jamie, and thank you very much for the invitation. It's always good to get the chance to discuss fair tax and certainly our approach that we've taken over the years.
Brilliant. Okay, so I've got a few questions for you today. So we'll start off. So my first question to you, Martin, is SSE were one of the first companies to become Fair Tax Mark certified when we launched over 10 years ago. What made a large FTSE-listed business like SSE want to gain the Fair Tax Mark all those years ago and become leaders in this space?
Yeah, I mean, I suppose casting my mind back, I'd say we didn't really go into it intending to be any kind of trailblazers. Our involvement with Fair Tax Mark accreditation was really a development in terms of our sustainability reporting. Now, because if you look at what SSE does, we build and operate large electricity infrastructure assets. So, and we have done for decades. Now, a lot of the assets which we build and operate are the ones where you'll get a reasonable amount of pushback from society. So things like pylons, onshore wind farms, solar farms. Well, there's a real process you have to go through to really sell those to society and particularly local communities. So we've done quite a lot of work looking at sustainability reporting around the types of assets which we want to build. Essentially, here's why they're required. Here's what they'll contribute to decarbonisation measures. Here's what they'll contribute to the local economy. So we started reporting on that basis, but then also from an SSE perspective of, we're a big business that does this. What do we contribute? So obviously tax is a fundamental part there of what a big business contributes to society. So we actually, our desire to, be more transparent around tax and so on, essentially came off the back of that because what we found when we looked at, particularly around tax reporting and the public perception around big businesses, what's I found quite stunning at the time was just the complete lack of trust that there is in big businesses. If you any polling you do, and we did polling back 10 years ago, but any polling you do, pretty much number one in terms of areas where the public have a lack of trust in business is around payment of tax. So is when we were looking at, okay, we want to be able to say how much tax we pay as part of this, as a disclosure around, okay, what do we contribute to society? What do the assets we make contribute to society? If no one's going to believe what you say, then you're sort of banging your head against a brick wall. So that's why it was I guess the genesis for us engaging with Fair Tax Foundation to say, right, okay, some kind of an external accreditation, which obviously you guys offer, is potentially hugely valuable there, because it lets us then have that stamp of approval and that support that, like, what we're saying here, the public can actually take some, they can rely on what we're saying. So that was really, I'd say, what pushed us down the route which we went. It went down 10 years ago.
Yeah, the polling really shocked me as well. I think it was the Institute of Business Ethics that said that 35% of the British public believe that only 35% believe that companies behave responsibly and ethically, and that corporate tax avoidance was the number one ethical concern that the public had for 12 years on the row. I couldn't believe it. So yeah, I totally get your point about independent accreditation, adding credibility, especially when it comes to a business's taxes, clearly. Okay, so there are so many reasons why businesses come to us to gain the Fair Tax Mark certification. Things like it resonates really well with customers and employees. In fact, one particular head of tax told me they actually took the job because the company was Fair Tax Mark certified, honestly. And this was because not only did it align with their values, but that it was a good indicator that the business's taxes wouldn't likely be unnecessarily complex or artificial or overly aggressive, and that the culture would be about responsibility and accountability. So that's just one anecdote, but I want to get your thoughts, Martin. What are the main benefits that the Fair Tax Mark brings to a large FTSE listed business like SSE?
Yeah. Well, I suppose I would echo your comment there around the perceived value of Fair Tax Mark, particularly in the recruitment process. I mean, it's one of the, I'd say, the main points we push when we're recruiting, because it's one of a suite of things. So around being a living wage employer, what we contribute in terms of net zero and so on, being Fair Tax Mark accredited, attracts a certain type of employee, people who want to work with responsible businesses. So we push it, and say not just, and I use it a lot in terms of tax recruitment, but across the business. It's one of the key things which we sort of use to sell SSE as a good place to work. But I'd say probably key benefits for me, if I look at as a sort of like a tax director, is it's really credibility and trust. Because we're pretty clear that we don't avoid tax, and that that we're happy to pay our fair share of tax, because we recognise essentially the importance that tax plays, the importance as part of the social contract. So I'd say, as an organisation, we're very much invested in the ethos of fair tax. Being wedded to that ethos, and I say essentially having the accreditation as well, like I say, gives us credibility and actually builds trust. So where I see the most benefit of that is particularly through engagement with government, because we go into engagement with government, particularly around development of the tax regime, and I would say we're seen to be a trusted party, and particularly with the current Labour government, got a huge focus on growth, and they're sort of saying they really want to see growth, drive growth, particularly in sort of key industries like the energy sector and the drive for like net zero. So being able to engage with government, to work alongside them to try and drive growth, to be able to point out essentially where the tax system can contribute there, and the role it can play, but being seen as actually you're in there because you've got something to contribute, rather than you're in there trying to game the system or to see how you can work around it. I find I get, as an organisation, we get a massive amount from, and I get a lot from personally, because it lets us help guide the tax regime in a direction that delivers, not just from our collecting tax regime, but actually works for business as well. So that credibility side of it is a massive factor. But also, because we have taken this so seriously, it's really let us, I guess, raise the bar for what does good tax transparency look like. So going through the Fair Tax Market Accreditation, it's really let us focus on what does good tax reporting look like, and it's something which we've evolved over the last 10 years to become market leading there, because there is a bit of we're big businesses, we work in competitive environments and things. There's a wee bit of you throw down the gauntlet a little bit to others. So we've seen that recognised. We've won PwC's Building Public Trust Award for tax reporting in the FTSE 350 for the last 3 years. So we're the only company that's won it for 3 consecutive years. And every year, when you look at the judges' comments, a big part of it is how well we articulate the role of taxpayers in society, how important it is that businesses pay their fair share, because it makes it so clear that that's a big driver for how we operate as a business. So again, that's a huge benefit for us, that it lets us essentially lift that bar for other big businesses.
Yeah, do you know what? I actually really enjoy reading and reviewing SSE's talking tax reports. I know that might sound a bit strange to some people, but it really is so pleasing to see a company's taxes explained in such a clear and user-friendly way, and with lots of detail as well. Even someone who didn't know much about taxes would understand what's being paid, where and why. It really is a good report, very interesting.
No, thank you.
Okay, so in terms of the process of the Fair Tax Mark certification, I'd like to think that it's not too taxing, pun intended. We know how busy people are in their roles, and we like to see the process as a way to help the business and big it up rather than adding an extra stress to it. We work with businesses, not against them. We work around their timetables and capabilities. We do all of the heavy lifting up front initially, providing a report for the company to then action before becoming certified. So Martin, I'm interested to hear your thoughts on what this process is like for a business like SSE, as I can imagine you've got lots and lots of requirements and deadlines to juggle. So how is the Fair Tax Mark process for you, and what do you like about it?
Yeah. Well, I think the fact that we've been sort of accredited for 10 years, it's essentially a well-established process that we have in place now. And I guess it's one of the things which is a big advantage for me, is we've got flexibility around particularly how we work through the accreditation process and the timeline for it. So we were able to set from the outset, okay, when is a quieter period when we can do it, when we've got the time to actually devote to it. So normally we'll get sort of year-end accounts and audit process out of the way. We'll have some regulatory reporting which we need to do, and then we move on to the accreditation process thereafter, which we then tie in with the publication of our talking tax document. So, like I say, it's actually quite a streamlined process now, because we've been doing it for so many years. But where I see the sort of one of the main advantages for us in sort of following that path is it lets us essentially stress test what we're doing and what we're proposing to disclose with yourselves, because we tie it in. So us preparing our talking tax document each year, we tie in with Fair Tax Mark Accreditation. So we share the draft document with yourselves. You give us feedback on, right, okay, does this work? Does it not? What are others doing? So it lets us, again, test ourselves of, are we doing enough here? Are we explaining things as clearly as we should? Are there bits we can change, taking advantage of, obviously, the Fair Tax Foundation's experience there. So I actually find it's a really quite streamlined process now, which I say lets us do it at a time when we've actually got sufficient resource and so on to devote to it.
Yeah, and sometimes that outsider perspective, you're so involved with something and you see it day to day, you don't realize how it looks from somebody's point of view that's outside of the business that might not understand tax that well.
Right.
And just to know as well, I mean, I always say that our standards, they've been made to be as future-proof as possible, going above and beyond what's currently necessary for businesses to do. It means that our assessments usually highlight things that companies never even thought about before. And then when companies act on this, they become exemplars and leaders in the responsible tax space, just like SSE and your Talking Tax report. Okay, so why do you think responsible tax is important, Martin, for businesses?
I'd say it comes back to that point I made earlier about just the social contract between government, business, and society. I mean, paying your fair share of tax there is an absolutely fundamental part of that social contract. Because if you're not doing it, then how can society develop and grow? And how can government have the resource they need to essentially provide the public services which we all need? So I'd say that's the main driver for me around why responsible taxpayer behaviour is so important, because I say it's the impact on society. So I guess speaking as a tax director as well, there's also, in my experience, responsible taxpayer behaviour also helps deliver stability, trust, and I guess reliability. So here at SSE, like nobody's going to give me a pat in the back for delivering what's perceived to be a tax saving, which then comes back to bite us later on down the line. So because you've gotten into protracted disputes with the tax authorities, these kind of things. So there's a real benefit to being responsible in the first place. And, don't get me wrong, we do tax planning. I wouldn't be doing my job and my team wouldn't be if we didn't do appropriate tax planning, but we don't avoid tax. And that's where, so we see the distinction of we're responsible, and it lets us actually then manage our tax liabilities in a way that, all being well, avoids surprises.
Yeah, 100%. And I actually think this is why investors in particular are really starting to pay attention at the minute to businesses' tax conduct and the
Yeah.
risks that this brings when making investment decisions. They want to see investments grow based on genuine economic performance, not on how good it is at avoiding its taxes.
Yeah.
As this is then a high risk investment into it, subject to scrutiny and tax policy changes and brand damage and things like that. But personally, I think that taxes are one of the most important ways a business gives back to society. I mean, they should play their part by paying them honestly, responsibly, and in turn, obviously, a healthy and well-functioning society benefits the business. It's like a virtuous cycle. Okay, so we've covered responsibility. What about tax transparency? Why is tax transparency important for businesses, in your opinion, Martin?
Well, I think it comes back to your point there around sustainability of earnings and sort of no surprises. Because investors, analysts, and so on, they don't like surprises. They want stability. They want to be comfortable that, as you say, what's been delivered is sustainable economic profit rather than something which has been sort of manufactured. And that's where, I mean, you'll see from our Talking Tax report, we devote quite a lot of time and effort there to explaining why the amount of taxes we've paid change. Because ultimately, we've got quite a broad range of taxes across property taxes, environmental taxes, people taxes, and so on that impact upon our businesses. And the amounts that we pay differ depending on what happens in our business. So actually being able to say, okay, here's the amount of these different taxes we paid this year, here's how it compares with last year, here are the drivers for why that has happened. So it actually links in really well then with what's happening in our businesses. So for instance, if you could say something like climate change levy, so we might pay less climate change levy because our portfolio of generation assets, we're investing much more in renewables, and we're winding down our thermal plant. So again, it's a positive contribution that, okay, we're paying less tax, but because essentially we're decarbonising our generation portfolio. So, so having that, again, being transparent around that's the driver for it. We're paying less, say, climate change levy for that reason, rather than we're doing something that somehow avoids it. But then at the same time, if you've got a shift like that, our electricity generator levy might increase because, again, it's on renewable generation rather than. So being able to sort of make that link and say, you can see from our generation portfolio, there's been a shift from thermal to renewables. So we're paying less climate change levy, but more electricity generator levy. Again, that people can understand that and they can see, okay, here's the commercial drivers for it rather than some tax avoidance regime. And again, particularly things like if we're paying less corporation tax because we're investing and we're getting higher capital allowances, being able to say we're paying less tax on our profit because we're investing so much. Again, it ties back into that trust aspect of it, of there's a clear explanation that's commercially driven why this has happened.
Yeah, and I think the narrative matters. A lot of taxing reports are just numbers, with no real explanations. And just these little explanations are really important. They do go a long way. Okay, so this is a question that I really want to get your thoughts on. Okay, so in terms of tax transparency, there are many businesses that support public country by country reporting. SSE is obviously one, as it's a major component of gaining the fair tax mark for a multinational business. But there are also many businesses that would rather not share their profits made and the taxes paid in each jurisdiction that they operate for various reasons. But since SSE have been voluntarily doing this for many, many years now, explaining to stakeholders which countries they're in and why, and the resources deployed in them places, along with transparency on the profits made and the taxes paid there. What are SSE's thoughts on publishing this data and the transparency that it brings?
Yeah, I mean, I see public country by country tax disclosure as being an absolutely critical part of tax transparency, because again, it's such a key factor in terms of the taxes you pay and to some extent the taxes you don't pay. So being clear, essentially where you have activities, where you're making profits, the tax paid on them. I can't see you can have a fair recognition of that unless you know exactly that how that global position looks. And so we've always been quite clear on that. And again, it's just that explaining, because we do end up buying businesses that have, say, companies in tax havens and things, and it's like, okay, we bought one because of this reason. We will then wind it up and be quite clear there. And I appeared, I mean, this has gone back a few years, but I appeared at the European Parliament alongside other big businesses where this has been tested by the European Parliament around, because they wanted to look at public country by country reporting. And there were a couple of banks there, and they were getting a really hard time from the MEPs around, okay, we can see you've got all these companies in the Cayman Islands and things like that. Why? Why are they? And so they were having to try and explain why they did have companies there that hadn't wound up. And the reason, so it really shines a light on that of your business activities and essentially where you're making profit, and particularly how it then ties in with your tax liability. So, like I say, for me, it's a fundamental part of that picture around your tax regime.
Yeah, and again, it's the narrative, like you say, if businesses are buying other businesses and those businesses have got, subsidiaries in tax havens, with no narrative, if anyone looks at that and they think, oh, they're in a tax haven, but a little bit of narrative just to say, we bought a business, it had a business in, this jurisdiction, there's no activity going on there, or we've no desire to use that jurisdiction, so we're going to wind it up. Just that little bit of narrative, just.
And yeah, because we've got, I give it, so we have an Isle of Man captive insurance company, and so obviously that would be a potential red flag for people, but we only have it because essentially the capital requirements and the administration costs of an Isle of Man captive insurer are so much less than, say, in the UK. But we treat it as a controlled foreign company, so we pay UK corporation tax on its profits. So again, that narrative of, yes, we've got it, here's why, and essentially here's how we ensure we pay tax on the profits.
Yeah, and I just want to say as well, like some businesses, they might have reservations about publishing this kind of information because of commercially sensitive data or anything like that. But again, in my opinion, there are ways that you can be transparent about your country by country reporting without necessarily, giving away all this commercially sensitive data. Percentages can work sometimes, or just explanations can work sometimes. There are ways and means to do it. So, in my opinion, if you've got nothing to hide and you're doing everything above board, and you provide the right amount of narrative, leave no room for speculation, then this can be done, in my opinion.
Yeah, I completely agree.
Okay. So a couple more questions just before we move to any questions from the audience. In your opinion, I think you covered this before, Martin, to be honest, but in your opinion, what ways can governments better support a business like SSE, a company that champions sustainability and that is open and honest and fair when it comes to its taxes?
Yeah, I'd say there's two, I'd say, main limbs to that. First one is having appropriate, valuable investment incentives. So a government who understands where they want businesses to be investing, where they want growth to happen, and then having appropriate investment incentives there. So things like capital allowances and so on to help encourage that investment to take place. So having a clear, focused investment incentives regime is a big benefit there. But also having a tax authority who actually works with business, because I think it's making that distinction between businesses who are quite clearly going to try and avoid as much as they can, who that's where the tax authority, in my opinion, effort should be focused on, rather than ones who are genuinely investing in businesses, building assets and things. And we've seen this before of, quite ourselves and others being sort of taken through protracted litigation through the courts to get tax allowances on genuine business expenditure. So I think having a tax regime that essentially works constructively with businesses who are happy to pay their fair share, at the same time clobber the ones who don't. I think that having that combination is great. And I'd have to say the current government, Labour government, I think are doing really well there, because they've listened to a lot of these things we've had to say around what's stopping investment taking place and what they can do to actually speed up investment.
100%, 100% agree. Okay, so what are your thoughts, Martin, on the future of responsible tax and corporate tax transparency?
I would hope it's all moving in the right direction with it. I mean, because one of the things which has frustrated me over the last few years has been the fact so much of it's voluntary, and it's been really down to responsible businesses being the ones to step up and work with Fair Tax Foundation and so on. But it being largely voluntary. So having standards coming in which ensure consistency, and so particularly tying with sustainability reporting, I think as well. So it helps because again, it's looking at that entire picture of what your business does. So what I would hope to see in the future, and I think I say positive signs thereof, I guess that more consistency and requirements for businesses to disclose. But again, all being well, that greater recognition of the social contract and the role that tax plays there. Because if you're having to be more transparent about your tax affairs, your tax policies, that has a positive impact on the businesses that might otherwise have, seen tax more as just a cost rather than an area that fairness definitely has a role to play.
Yeah. Okay, so last question before we move to questions then, Martin. What would your advice be to other businesses who are thinking of applying for the Fair Tax Mark?
I would be very much supportive to them of doing it, because like I say, from our perspective, we just get so many benefits from the accreditation and from working with yourselves. So to some extent, I don't really understand why businesses don't. I mean, we've seen a big influx over the last few years, particularly in our sector. Other big businesses in the energy sector getting accreditation, big multinationals getting accreditation things. So it's been fantastic to see that momentum grow over the last, particularly sort of like 3 or 4 years. But I struggle to understand why more businesses aren't going for it. And I guess that raises a question for me, probably back to you, of what are the challenges you see when you're engaging with businesses and they're saying, we're not really sure. What about what are the sort of potential stumbling blocks that they sort of raise with you?
There is various ones, and some of them are genuinely legitimate. I think a lot of it comes down to transparency. I think I would say most of the businesses that are doing the right thing, value what we do, would definitely put stuff in the public domain towards, acting within not just the letter of the law, but the spirit of the law, and paying taxes where value is created and not shifting profits and things like that. But there is reservations from some businesses on being transparent about certain bits of data. Again, like I covered before, for various reasons, but we end up working with these businesses to do it in a way that works for them.
Yeah.
So I think some businesses might not reach out because they think, oh, I can't do that yet, or I'm not ready for that yet. Or one of the biggest misconceptions we have is if you're not paying taxes, you can't get accredited, and that's just not the case. Obviously, there's loads of legitimate reasons why a business might not be paying taxes. It's loss making, for example, or it's invested heavily in, plant and machinery and things like that. They're all legitimate reasons, obviously, why a business would not be paying taxes. So, it's not right that a business thinks, actually, in a few years when I'm paying taxes, then I'll apply. That doesn't need to happen. But those are the type of misconceptions I think that some businesses have. But yeah, like I say, we work with businesses. It's all about being responsible, being transparent, and if you want to get recognised for being that way, we can help make that happen. Right, Martin, thank you very much for your time. Is there anything else that you want to mention before we move to the Q&A?
No, I mean that's been a really comprehensive sort of run through tax transparency, our sort of history and things. I guess the only thing I would add is just a thanks to you, Paul, Greg, Tom, and Natalie and the team for essentially the support you give us, and particularly the good work that you've done in taking it. From my perspective, it's been fantastic to see that snowballing, that traction gaining over the last few years, but because of the effort that you guys all put into it. So keep up the good work, because it's definitely making a difference.
Thanks, Martin. I'm just looking now at the Q&A box, and I don't think there's anything in it. So that must mean that we've spoken so well and covered everything. Oh no, one's popped up just now. Do you want to take that, Martin? How do tax and the net zero agenda overlap?
That is a very good question in terms of our industry. And I think it very much plays into, I guess, that engagement with government as well, because you've got a government who are very committed to net zero and delivering it over a period of time. But then, tax, I suppose there's two probably key aspects here from a tax perspective. First off, there's what incentives do you need to be included in the tax regime if you're going to achieve the investment in decarbonisation that's needed? So to what extent are you prepared to incentivise that through, say, either taxpayers or customers? But then on the other side, you've got the environmental taxes side of it, as I touched upon earlier, as you decarbonise your energy infrastructure and move towards net zero, what does that do to your tax take around your environmental taxes and so on? So I think those two elements of it definitely need to move forward hand in hand, because as you decarbonise your energy network, you need to understand what impact it's going to have on and particularly what incentives are required to actually deliver that investment.
Yeah. Yeah, I think we need to reward the right types of investment and the right types of businesses as well.
Yeah, yeah. I mean, and I think particularly with that drive to net zero, because we were working to really challenging timelines there of actually getting projects consented, getting them approved, that the role of tax incentives there, I think, is pretty critical just now, to ensure that we can deliver over that period of time. And again, that's where it's been really positive with the current government and their sort of consultation around how can they give increased tax certainty on big capital projects, because they understand that, you know, if you've got projects that are maybe borderline and you've been overly prudent in your tax assumptions because you know there's a risk around, I know, asset life and what rates of allowances might be available, whether it falls within electricity generator levy or things like that, getting that certainty potentially gets those projects over the line.
Yeah. Yeah, definitely. Okay. Just say, oh, there's another one. Is there a divide opening up between US-based and Europe-based companies' policy in terms of tax transparency? How do you navigate geopolitical changes like this? Do you want to take that one, Martin?
Yeah, it's a really good question. I mean, I think they are certainly in my experience, there has been a sort of different approach possibly to tax planning and tax avoidance between, say, like US multinationals and, say, like European businesses and so on. But I think partly driven by how tax legislation works in the countries concerned. So if you look at, say, like the US typically don't really tax profits made outside of the US until they're brought within the US. So, whereas if you look at, say, like the UK or big parts of Europe, you've got really quite broad, effective anti-avoidance legislation. So if you've got, say, like a US business, they're more inclined to sort of build up money offshore, possibly, and where they're paying less tax. And then the US government will have these amnesty periods where they'll reduce the tax rate and say, okay, if you want to bring that money back, you'll pay less tax on it. So I think that is definitely, a contributing factor there around how businesses operate, and particularly where they keep cash. Now, the OECD BEPS Pillar 2 initiative will have an impact there, because obviously if you're saying 15% tax rate across the board, it does reduce the extent to which you can essentially, potentially avoid tax in some tax havens. And then also Pillar 1 around, I guess, ensuring that profits are recognised. Sorry, profits are taxed where they actually are generally arise. So I think the stuff the OECD's done over the last while, I think definitely helps level the playing field there a bit.
I really like the way you explain that. I like that. Okay, so I think we'll just close there. Yeah, so I just wanted to say thank you, Martin, and to everyone joining us today for being part of this important conversation as we celebrate SSE's 10 years of responsible tax conduct. I really do hope you found today's session insightful and inspiring. If you want to know more about us, the Fair Tax Mark, or how your organisation can get involved, you can visit our website at fairtaxmark.net. Also, if you want the latest updates and resources in the world of responsible tax, I strongly advise that you sign up to our newsletter. It really, really isn't boring. There's usually 4 to 5 snappy and interesting headlines for further reading if you want, every other week or so. If you want to get in touch with us, just email info@fairtaxmark.net and we'd love to hear from you. We'll send you all a follow-up email tomorrow with all these details on, so don't worry. Thank you again for your time.
Maybe there's one more question if you want to take it.
Oh,
One more question just dropped in.
okay. There's one more question. Bear with us. One sec. Okay. Have you had any businesses that haven't received the accreditation, but you've worked with to improve transparency? Yes, 100%. So the accreditation, quickly before we close, is two parts. The first part is the assessment. So we usually go in and we assess all your information that's in the public domain, your policies, your practices, your reports, and things like that. And then we develop a report that tells you exactly, what you would need to do to become accredited, but also how you could improve each area and all the areas, recognizing where you've done well as well. And then it's up to the business then to take that away. They can either work on it over time, or they can, just use it for market research information or whatever they want to do. But 9 times out of 10, a business then does do them things, and then they move to accreditation, which is the second part, which is then the reward and the celebration and the recognition of it all. So you can just apply and get basically a report that says where you're currently performing. Yeah, we do that. Okay, so again, thank you for your time, all your questions, and your commitment to fair tax. Have a lovely rest of your day, and thanks again, Martin, and goodbye, everyone.
Thanks, Jamie. Thanks, everyone.
Thanks,
Bye.
Martin. Bye-bye.